This lesson is 4-5, credit card statements. So we have our example, and we need to find out all of this information from our statement, okay? So why don't you pause the video and see if you can find these things here. Start the video to check your answers. So this is all the information we can get off of our statement. We got our account number, we got our credit line, so our account number was here, our credit line, and our available credits down here. Billing date is there, it's due this day. We have our transactions, there's 5 of them here, whether they were pluses or minuses, so whether we bought or we paid and who they were to. Our previous balance here, payments and credits, new purchases, whether it was a late payment, our finance charge, our new balance, and what our minimum payment is. Then we have our average daily balance, the number of days in the cycle, our annual percentage rate, and then they divided that by 12 and got our monthly periodic rate, okay? All right. Let's go to example number 1. The summary portion of Jane Sharp's credit card statement is above. Explain how the new purchases amount was determined. So her new purchases, we'll call this NP, was determined by, at the top, doing her 75 plus 3185 plus 139.10 plus 38.50 minus 75. So these were all her transactions. Okay? All right. Oh, the 75 is not in there. I lied. Because it's just purchases. Sorry. So it's just her transactions, all her, what she used her credit card for. So how do we get her new balance? Well, her new balance comes from her previous balance minus her payments, PMTS, or she had credits, like if she returned something. Then they would add in her new purchases, they would add in her late charge, they would add in her finance charge, and that would give her her new balance. Okay? So 150.50 minus 75 plus 284.45 plus 0 plus 353 gives us her new balance. So go ahead, pause, and find her new balance. Well, we already know we should get 363.48, and we know the math validates that. Okay? All right, next example. So we're done with Jane Sharp for now. We've got 2 formulas on the top of the next page. Make sure to read through those. And we have Pascal. Pascal has a credit line of $15,000. So that means the most he can charge on his credit card is $15,000. His summary looks as follows. How much available credit does he have? So how much can he still charge? So his previous balance is $4,598.12. He made a payment of $4,000, but he charged $1,368.55. He paid it late, so he has to pay that fee, and then he has interest or a finance charge. So we're going to use, just like we did on the last page, 4598.12. Payments are subtracted. New purchases are added. Late charge is added, and a finance charge is added. So go ahead, pause your video, and how much what is his now new balance. And you should have gotten $1,992.45. So this is his new balance. Well, he has a credit line of $15,000. If his balance is only $1,992.45, that means he has a lot of credit available. So subtract those. He has $13,007.55 of available credit. So that means he can still charge that amount on his credit card. I'm not saying he should, but he could. All right. So our check for understanding. Rhonda had a previous balance of $567.91. Made an on-time credit card payment of $567.91. She has a credit line of $800 and made purchases totaling $123.82. Find her available credit. Well, what you should notice is her previous balance and her payment, they cancel each other out. Okay? So her previous balance is $567.91, but she paid $567.91. Her new purchases are $123.82, so her new balance is $123.82. So this was her previous balance, this was her payment, and this was her new purchases. So now, to know what her available credit is, we take her credit line of $800, subtract $123.82, and we get $676.18. So she has available credit of $676.18 still. That's really good. All right, example 3. Myrna is examining the question or the summary section of her credit card statement. Myrna has checked all the entries on her bill and agrees with everything except the new balance. Determine where the error was made. So again, we know previous balance minus how much she paid plus her new balances plus her late charge plus her finance charge better equal the new balance. So let's see what happens. So go ahead and pause the video and put that in your calculators. So you should have gotten a new balance of $2476.15. So something happened with the payment because we're off by $100. So the error is in the payment. And there's my lovely cat. Go, Rosa. There's her little paws and her little tail. Go. Okay? Alright. So what's next? Fair credit billing. Go ahead, pause the video while I shoo the cat away, because now she's going to sit on the paper. And you read about Fair Credit Billing Act. Highlight where necessary. Alright, so determine the error that was made using the following statement. Summary statement. So again, we have our previous balance minus how much we paid plus our new purchases plus our late charge plus our finance charge equals our new balance. She won't leave. Can you go away, girl? Alright, so pause the video and find out where the error is. So you should have gotten a total of $597.78. So what's the difference between these? It's $90. Well, a $90 difference usually means that something has been transposed. So what we're thinking is these numbers have been transposed. So our payments should have been, when somebody put it in the computer, it should have been $650, okay, instead of $560. And that could just be a person error, and you just call and they look it up and you're good to go. All right, if you have any questions, please make sure you ask. I'm sorry about the invasion of the Rosa. Good luck.